Hey guys, David GammaEdge here coming at you with a market recap from May 23rd, 2025. So the big thing to note is we had a large gap down from prior day's open, or prior day's close rather, but that was quickly bought up. 5,800 was the key fulcrum in the structure for Friday. Once we were able to overtake this level, you can see it took us, 3 or 4 tries to get above this, but once we got there, then we got a nice trendy move higher and then really just kind of a stagnation the rest of the day. But nonetheless, 5,800 was a key fulcrum that was identified in the pre-market around 7 a.m. during our pre-market analysis. So you knew that level way ahead of time. Let's get into now that pre-market analysis, how we came up with that, and then how we traded the price action intraday. So right, first off, we have a full pre-market routine. These are all documented in our blog, right? We have 11 articles on our blog now. They go over our key frameworks, our key tools. Also in the description of this video, there's an evergreen playlist that we link to where all this is documented for you as well. Right, and as we document on Twitter every day, our approach is built around simplicity and consistency, not complexity. So, right, what we're looking to do is we're looking to understand today's structure through the lens of the SPX options market. We want to identify those key levels of reference. We want to then monitor intraday volume flow to understand character, price action, and then we want to execute. So, right, the first part of that routine is overall stepping back, understanding how the market kind of is positioned more broadly, not on a 0DT time frame, right? That's its own beast, but just understanding from more of a swing trading point of view, is the market more bullish or is it more bearish? And so, right, looking at our market trend model, again, article in the blog or a video recorded for this, you can go learn more about that there, unlock the point of the market trend model. But right, over the last couple days coming into Friday, fairly flat price action. We were above the long-term moving average ribbon. So, kind of on a longer term time frame, we were bullish, but in order to be more bullish kind of now, we want to see that short-term time frame start to trend higher. The newsflash on Friday, we really didn't get any significant movement, fairly flat for the last three trading days of the week. Right, and then looking at the SPX-A, SPX-P full options market complex, these were broadly, call dominated, both above and below spot price. Right, so sorry I misspoke. I was just talking about SPX-A a minute ago. This is SPX-P now. You can see the big difference in structure here. Look how this is, a ton of red, for lack of a better term. This is just a put dominated structure right here. Going back to SPX-A, again, this is more call dominated. SPX-A, remember, is that's where your longer term money is positioned. So this is a slower moving structure. So we've been very call dominated, just given the rise, the rapid move higher in price that we've seen, and obviously the call speculation that has come in as a result of that. But now the shorter term, smaller SPX-P complex, which is where more of the short term traders, that is decisively more red, decisively more put dominated. So again, kind of showing how the market trend model is flat here as well. SPX-P is starting to deteriorate, which has us a bit more cautious here. Keep in mind, overall, market trend model was stronger on a long-term basis. SPX-A is still call dominated. But, net kind of on a short-term time frame, we are a bit more cautious here until we start to see that SPX-P structure start to become call dominated again. However, right, then getting into specifically SPX 0DT structure, which is what we're going to spend the remainder of this video talking on. It first starts with our transition zones. That was 58.85 to 58.90. And then we have 5,900 to 58.75, which is our drunken sailor zone. Again, both of these are key transition zones in the market where we're generally more bullish above and more bearish below. This is just a quick way for us to understand where those transition points in the 0DT structure are occurring. However, that's not to say that we can't go higher when we're below transition or go lower when we're above transition. In fact, we're going to go over today why, the expected move was to move higher when we opened so far below the bottom of transition zone, right? Our implied open was around 57.60, 5,800 was a key level in the complex. Again, no matter what kind of options market analysis that you provide, you should have seen that 5,800 was a key level. And then from there, 58.25 was kind of the next logical step once we got above 5,800. So again, keep those two levels in mind, 5,800, 58.25. Right, and just getting into kind of the main crux we're going to talk about today, we can see in the pre-market where we're implied to open that this is just a massively put-dominated environment. So what that means is A, there were a ton of negative deltas captured with the overnight move, pre-market move, and now that it is weighing on the market. However, secondarily, that is also potential fuel to the upside because those puts are now massively in the money, at the money from where they were put on at the end of Thursday's session. So those people are going to want to monetize their position before the session is over. And that monetization could lead to, again, a removal in those negative deltas from the market, and then a kind of a rapid appreciation due to the flows that have to come in because of those actions. And again, 5,800 was kind of our key line in the sand to thinking where this may happen. Because again, in the pre-market, this NetStat tool, if you're not familiar with it, again, not going to spend time here talking about it, but we have, a blog article, we have a YouTube video on that as well. Simply put, this is our analysis of the 4 key Greeks, and we could see that, 5,800 was a key upside level in terms of both charm and gamma. So, have 5,800 laid out for you right here. That's that key level there. Again, then I have 5825 laid out for you up there as well. So just replaying the price action from today, obviously had the gap down, but really off the open, we just shot straight up, got above the opening print, which was, trading above VWAP for most of the session. Then we started to bump our head a few times against 5,800. And then once we were finally able to recapture above 5,800, then we got that move to 5825, exactly how we outlined it in the Discord, and recap your wins. I documented that trade that I took above 5,800 up to 5825. Key thing to note here is, you can see two little very small losses, break-even trades really, that I was taking right around 5,800 because I was expecting that move higher. That's where the risk to reward move higher was, in my opinion, was 5825. And then you can see eventually got that move, 1 for 3 on the day, but this is risk management. Look at the size of the losses or break-even boxes relative to the green winning box. That's what trading is, right? So if you're in the Discord, feel free to, read my thoughts there. You can go back to the pre-market prep as well. However, that is not the only way that you could have traded today using kind of our knowledge of the levels and then our tools. So, yes, we got the move from 5,800, 5,825. That was pretty easy trade. Okay, awesome. But, the other ways is if you're kind of more of a directionless trader selling option credit spreads. The second way that you could have used our tools to help you with that is using our intraday volume analysis to understand kind of what the flows of both from the 0DT call and put speculation side. That is what we plot throughout the session. They're called centroids. On a 5-minute basis, we aggregate all call and put volume. We find the middle of that distribution, which is the centroid, and we plot that. So every 5 minutes, we plot, connect the dots so we can understand from the open to any point in time what the behavior or speculation of the participants has been. And that is 2 key benefits. One is we can understand the character of price action in terms of trending versus chop. If we have call centroids trending, put centroids trending higher, price trending higher, we know that, the behavior and the speculation of the market is higher. And remember, price goes to where transactions are occurring. That's why these centroids are critical to track. Because as you can see, as we start to get out towards the end of the market, we're not seeing that expansion higher in call speculation. And we need that if we want to see price move higher. So again, we got that move to 5,800. We saw a little bit of speculation higher. Price continued to go higher. But once we got to that 5,825, that speculation really died down, put a lid on any upside move that we wanted. So from there, that's where it started to make sense to look towards, or we had folks, selling both sides of the market, selling butterflies, whatever, because the second way that the centroids are helpful is if we know what the behavior of price has been from the open to any point in time, we can then project out where those centroids are going to trend towards the close. Remember, price goes to where these centroids are transacting. So again, if we can reasonably project out where those centroids are going, then we know where price is going as well. So again, that is the second powerful way to use this tool. So again, just an example for you here. Here we are at 2:35 in the afternoon. We can see, the call centroid has been fairly flat in the afternoon trading session. Put centroid is still trending higher, but all else equal, understanding what the behavior has been, we can then project out where price is going to settle. And so we could see, there's a pretty good cap on the market, not a huge kind of expected range per se of where price could go. So again, another actionable way to use this tool. And so with that, again, just recapping today, we knew 5,800, 5,825 were key levels in the market. We knew that with the massive gap down, we were in a huge put dominant environment. So the risk there was that we were going to see monetization of those at the money and the money put contracts, which would help propel price higher. 5,800 again was that key level. We never saw any impulse lower of that continued selling, either through our market trend model or through our intraday volume analysis. There is no impulse lower in those puts. So, if you were chopped up because you were trying to short that market, That just means that you didn't have the right tools per se, or you're just stubborn. I don't know which it was, but whatever it is, prior correction in your system's needed. But for those that were using our tools, our levels, or whatnot, it should have helped, kept you safe today, at least kind of on the right side of the market, or kind of understanding what to look for. And also with you having watched this video, hopefully you understand kind of our approach to the market. Maybe it is for you, maybe it isn't for you, but hopefully you got some value out of this video, and hopefully maybe a couple new tools for your toolkit that can honestly be implemented on Tuesday's trading session. And with that, you guys have a great rest of your extended Memorial Day weekend, and we'll see you guys Tuesday. Thank you. Bye.